5. Adjusted trial balance. Accountants create adjusted trial balance from ledger's accounts. $42,000 of account receivable in account number 200 is transferred to the trial balance. In addition, $42,000 of revenue in account number 1000 is transferred to the trial balance. Moreover, cost of goods sold increased by $20,000 and it is transferred to the trial balance. Likewise, inventory decreased by $20,000. The adjusted balance is shown in the trial balance. $3,000 of salaries and wages expense is transferred to the trial balance. Correspondingly, $3,000 of salaries and wages payable is presented to the trial balance. $2,000 of income tax expense from adjusting transaction would be transferred to the trial balance. Equally, $2,000 of income tax payable is transferred to the trial balance. In this ledger, Company C has $350 of rent expense in the trial balance. On the other hand, prepaid rent is decreased by $350. The adjusted balance is $3,850 in the trial balance. $500 of depreciation expense is transferred to the trial balance. Equivalently, $500 of accumulated depreciation is transferred to the trial balance. Total debit side equals total credit side. Preparing income statement. Company C is able to create income statement from nominal accounts that present in the adjusted trial balance. In the first year of Company C's income statement has operating section, which consists of revenue, cost of goods sold, and operating expenses. Income tax is not considered as operating expense. Firstly, revenue account is presented in the top of income statement. Secondly, cost of goods sold always accompanies revenues account. Cost of goods sold is presented in negative number. Thirdly, revenue minus cost of goods sold equals gross profit. Fourthly, sales and wages expense is presented in the operating expense section. Fifthly, rent expense is included in the operating expense section. Sixthly, depreciation expense is reduction of long-term asset cost. It is shown in the operating expense section. Total operating expense is $3,850. Seventhly, gross profit minus operating expense equals income from operation. Eighthly, income tax is non-operating expense and it is part of income statement. Ninthly, net income is $16,150. 7. Closing entries. All nominal accounts are reduced to zero in this stage. These accounts come from the income statement. Initially we should reduce revenue to zero, by debiting revenue for $42,000 and crediting income summary for $42,000. Next step, we should reduce all type of expenses and costs to zero, and that include cost of goods sold, salaries and wages expense, rent expense, depreciation expense and income tax. To complete this procedure, debit income summary for $25,850 and credit for other cost and expenses for $25,850. Difference between $42,000 and $25,850 equals $16,150. $16,150 should be transferred to retained earnings by debiting income summary and crediting retained earnings account. Eight. Statement of retained earnings. The only input we have in the current year of statement of retained earnings is net income of $16,150. The net income is transferred to retained earnings. Ending retained earnings equals $16,150. 9. Post-closing trial balance. Only permanent accounts are part in post-closing trial balance. These accounts are assets, liabilities and stockholders' equity. Also, post-closing trial balance includes retained earnings as additional account. Permanent accounts would be used to create balance sheet in the next step. In addition, these permanent accounts have effect in future periods. Other statements preparation. This is the Company C's balance sheet, end of year 2020. Cash. Account receivable, prepaid rent and inventory are current assets in post-closing trial balance. Current assets would be firstly moved to the top part of the balance sheet. Equipment and accumulated depreciation are related to long-term asset accounts. These accounts would be moved below current assets to the balance sheet. Account payable, salaries and wages expense, and income tax payable are current liabilities. Current liabilities in the middle of the balance sheet. Common stock and retained earnings are stockholders' equity accounts. Stockholders' equity accounts in the bottom of the balance sheet. Total assets equals total liabilities and stockholders' equity.